Meta just reported earnings and the stock jumped by 14%. At the after-hours price of $450 a share, the company is now valued at $1.18 trillion. With $65 billion of cash and $18 billion of long-term debt, the enterprise value is $1.13 trillion. This was a strong earnings report from Meta, adding to a hugely impressive year. Revenue increased 25% in the quarter to $40 billion, and net income increased to $14 billion, taking the net income margin up to 35%. The number of daily people using one of Meta's apps rose 8% to 3.19 billion, and the company introduced its first ever dividend of $2 a share. On a yearly basis, revenue increased 16% to just under $135 billion. Net income was $39 billion and free cash flow was $43 billion. So based on the after-hours price, Meta stock is now valued at 30 times earnings and 26 times free cash flow. Crucially, Meta did all this while keeping a lid on expenses, which grew by only 1%. All in all, there isn't much to criticize about Meta's results. The company did lose $16 billion on its Reality Labs division, but that hardly matters when the core business is performing so well. Meta's investments into AI are clearly paying off and providing real value to advertisers, with ad impressions increasing by 21%. For investors, the key consideration is valuation and growth. Management said that next year's expenses will come in between 94 to 99 billion, which is quite a jump from last year's 88 billion. So if revenue growth doesn't keep up, Meta's net income margin will likely drop sharply next year, back under 30%. Capital expenditures are also set to increase to over 30 billion. If Meta's investments are flowing into its apps, that might be money well spent, but more investment into the metaverse is likely to be a waste of resources. Let's assume Meta grows its top line revenue at 12% a year for the next 5 years and operates with a 30% net income margin. That's lower than the latest quarter, but higher than the historical average. In that scenario, the company would be producing 71 billion of net income in 5 years' time, and a 25 times multiple takes the valuation to just below 1.8 trillion. Include dividends and buybacks, and the annualized return should be over 11% per year. So, even after the latest jump in share price, an investment in Meta can still deliver decent returns. But these are my personal opinions, not financial advice, and I hold no position in Meta. For more investing videos, make sure to join my newsletter at 3minutebreakdowns.com. Thank you for watching.